So my name's Angela Burton, and I am the District Director for the SBA's Lower Rio Grande Valley District. I also want to let you all know that I have two staff members here. I have Monica Stuber, who is our branch manager. Say hi, Monica. Yeah, yay. And then I have Elizabeth Solis, who's an economic development specialist. She's at the table working, sharing information. Give her a round of applause. Thank you. So how many folks in here are familiar with the SBA? Okay. How many got a PPP? How many got an economic injury disaster loan? Okay, very good. Can I get everybody to raise your hand right like this? Raise your right hand. Everybody raise your right hand. Raise your hand. Okay, and then go like this. Pat yourself on the back. And the reason I want you to do that is because today you all are taking the time to work on your business instead of in your business, right? I know it's busy. I know you have a lot going on, but the one great thing is you're taking advantage of all these great resources. So thank you so much for attending and at least for staying to the very end because we're the last panel. So our SBA, the Lower Rio Grande Valley District, covers 14 counties. We cover as far south as Cameron, as far north as Aransas, and as far west as Zapata. So Kingsville is in our coverage area, and so we're very happy to be here. And let's see what else. So today we've assembled an exceptional panel of experts who will generously share information and experiences on accessing capital. We all need money, right? We all need money for our businesses. Their extensive knowledge and expertise will illustrate the trends, challenges, and opportunities in small business funding. So before we begin, I would like to express my sincerest gratitude to our panelists for dedicating their time and sharing their knowledge with us today. Your insights will undoubtedly contribute to a meaningful and informative discussion, so thank you so much. Additionally, I just want to extend a heartfelt appreciation to the Office of the Governor for bringing together such an exceptional panel and event and providing us with a platform for learning and growth in Kingsville. So thank you so much to the Governor's Office. All right, so what I'd like to do is allow or ask the panelists to introduce themselves, the organization they're from, and their position.
Can you hear me? Oh, it's on. Okay, Ann Farova, I'm the director of the Small Business Development Center at Del Mar College. We do have, yes, thank you. We do service 9 counties with our services, and Clayburgh is in one of our 9 counties. We have Celia Garza at the back. She's our rural program manager. You can wave. Celia's the one you would talk to if you're from the Kingsville area, and Lucy is her right-hand person, also with our office. And my boss isn't here anymore, Dan Corse. If you see him, say hello. Anyway, the Small Business Development Center is here to help you and your small businesses. And I guess that's all I'm supposed to do, right? Thank you.
Hi, everybody, and thank you. I'm going to echo what Angela said. For you to stay here and invest in your future is really important. And I really appreciate that you're taking time out of your busy day to be here and join us. I am Laura Leal Estrada. I represent Lift Fund. We are a nonprofit 501c entity. The CDFI is the acronym. We're a Community Development Financial Institution. And my title here is Market Manager, but my company is headquartered in San Antonio. I office in Corpus Christi. I am hosted by the SBDC. Thank you for Ann Fiorova hosting me there, and I get to office there. Even though my title is Market Manager, we actually are now in 15 states, so I get the great opportunity to talking to business owners like each of you and those who want to be business owners throughout our 15-state footprint. So we are part of the SBA program as we're certified lenders through the 504 program, partnering with bankers like my partner to my right here, who will introduce himself. And then we have small loans that start at $500 and conventional loans and multiple opportunities for loans for veterans and significant different groups. Thank you. Also, I'm a former banker. Whoops. He turned me off. I'm a former banker from the 70s, so I've been around a while.
So with that, again, good afternoon, and to echo the thoughts, thank you all for being here. And for all of us panelists, I think it's an honor to be able to be up here and visit with you all this afternoon. My name is Mark Esparza. I'm the Chief Commercial Business Officer. It's a mouthful, I know. But basically, head up the commercial lending department over at Clayburgh Bank. Clayburgh Bank, as I'm sure most of you know, were founded right here in Kingsville, Texas back in 1905, so it has a long legacy in Clayburgh County and Kingsville. I'm originally from Alice and have lived there over the last almost 10 years now. And what's interesting about Alice is Alice was actually named after the daughter of our founder, Robert Justice Clayburgh. It was named after Alice Clayburgh. So this is my 26th year in banking. Hopefully I don't look that old, but all that has been spent here in the Coastal Bend between Corpus and Alice. I continue to office in Corpus at our kind of corporate headquarters over there on Staples and Williams. So really glad to be here. Hope we can provide some insight and helpful knowledge and tools this afternoon. So thank you.
All right. Okay. Can we give a round of applause for our panelists? Okay. Thank you. All righty. So lending or obtaining a loan or capital is kind of a process, right? Does everybody understand that process? Okay. So I'm going to address this to Ann, and I want you to express, and Laura can answer as well, what should small business owners do before sitting down with a lender? What is the most important thing for them to do before they sit down with a lender?
Okay, first and foremost, before you sit down with a lender, you want to make sure your house is in order. You have a clear vision of where you're trying to go. If you're trying to start a business, you need to have a good idea of what kind of background experiences you've had that will lend you well in that business, because when you're going to a lender, you're selling yourself along with your credit score, along with your vision, along with your preparedness that they can see through the documents that you produce and put in front of them. So I would recommend everybody go see a SCORE representative, an SBDC representative, before you approach a lender, because you only get one chance to make a first impression, and you want to be prepared before you walk in that door. And all those things I mentioned are part of the process that a lender's going to look at, and Laura will tell you in more detail. But credit's very important. Understanding your credit and what's out there so that you know there's no surprises. Everybody has the ability to pull a credit report for free every year. So you can take a look at what's showing up under your name, with identity theft and all kinds of things going on. It's a good practice for you to get into, to be checking on that once a year at least, to make sure there's nothing out there you don't even know is on your credit, for one. But for another, you don't want to be surprised by something, and you certainly don't want that to happen when you're already sitting in front of a lender asking for money. But also you have to plan. You have to have a plan. You have to be able to take what's up here and your ideas and how you think it's going to roll out, and it needs to be translated into a written document that anybody can pick up and understand. And that's where we come in at the SBDC. We can help you do all that. We can help you with research. You need to know the market that you're trying to jump into. You need to know, is this a growing market, a shrinking market? Where's my niche? How am I going to be ahead of my competition? These are all things that we can help you with at the SBDC as part of your plan.
And adding to that, I liked Ken Trevino's question to Manny. He said, what else should you be doing? And they talked about using the services for the SBDC and SCORE, but look towards your banker. Let your banker know what you're going to do, and if you haven't met your banker, go find them. Introduce yourself. Let them know what you're trying to do. You're going to need somebody to introduce you to bookkeeping and some insurance, and you've got to have somebody who understands what you're going to be doing so that they can guide you. What I like about the SPD and SCORE is they've got people with that background. I should be your last resource, maybe after Mark. Cybersecurity is very important. We talked about that. Employee recruitment, retention, community advocacy. I asked somebody yesterday who opened up a coffee shop, so, oh, you're opening a coffee shop, so tell me what you're doing for your community. And he paused because he didn't expect that question. Well, as a nonprofit, I want to know, what are you doing out there? Because my job is to make sure that I'm helping you and helping you with your business. I was visiting with someone earlier that she said, I was thinking about you to come and talk on my behalf. BNI is a networking group in Corpus Christi, right? And I said, I'd love to come speak on your behalf. I get to know who you are, and so I will advocate for you as a lender, if you want to use that word. But when you come to me, sometimes by the time you've come to me, you're so upset with your banker because you're not prepared for what your banker needs from you. If you don't know what an income statement is, a balance sheet, a profit and loss sheet, I always take Accounting 101 with a seminar that they offer over at the SBDC. Get yourself knowledgeable about your credit. This article came out of the New York Times. It was about credit, and I shared this with someone earlier. Know what your credit looks like and know who's taking advantage of you by not letting you understand how to manage your own credit. I have so many people that think that credit is not that important. Well, it really is. That's your character for me. Those are your ethics. How do you behave personally? Get your house in order is what Ann said. We look at you from a global perspective. I want to know what's going on at home. Can you support what you're doing at home? If you can do that, then we're going to talk about what you're going to need from me so I can help you with your business. And so it's about investing in your future today by getting access to all the information you can. The better prepared you are, the more realistic your point of view is when you go sell yourself to your banker with your business plan. You understand you're in the industry that you're trying to get into. And I said to somebody, don't quit your day job. Well, I want to. I said, love it a little bit longer. Keep it, because we're going to be looking for that secondary source of income, because you got to pay me back as you're getting started. And I'll finish it, but I'm going to say one thing. I asked a customer yesterday, how are you doing on your business? And he goes, I haven't been able to open yet. Oh, no. So what are you doing? And when we were talking in the marketing piece, he decided to market himself. He had to strategize differently. So he's doing barbecue. And he said, what I did was, I can't open. My food truck's not ready. So I started soliciting all these dealerships, and I was taking them a piece of my meat. And I said, you took a piece of your meat. Pork ribs, best in town. He says, a piece of meat is the best selling card. My business card, you can call me for my piece of meat. But he was strategizing, I can't open my business. So you've got to be able to strategize what's going on in the economy, how long is it going to take you to open your business before you get started. And I think those are some of the steps we miss as we're so excited to start our business. Thank you.
Hello? Okay. So I heard a couple of things. One thing that I heard, and we saw this a lot during COVID, when the SBA was trying to push out loans to small businesses, a lot of people didn't know their financials. They didn't know what their gross revenues were. They did not know what their cost of goods or even their expenses were. So making sure that you have your financials in order and understand your financials, because a lot of folks will have accountants or bookkeepers do their financials, right? But they don't understand the financial part of it. You're doing it because you got to do it because you got to do your taxes, right? But really, you need to use that data to help yourself in growing your business. And so my next question is to Mark. And this one's not really on the list, but Mark, so let's do two things. When a new business comes to visit with you about getting some financing, what financial information are you looking for? And then, as a separate question, if an existing business needs a loan or a line of credit, what financials are you exactly looking for? So let's begin with the startup, and talk to us about what you're looking for.
Okay. So for a new business, and I like what Laura said earlier, I think it's keep your day job or something to that nature, right? So on a new business, we're not going to have any historical information on your company, obviously. So we're going to rely on your personal information more heavily than projections, because projections are just that, they're projections, and there's no guarantee that it's going to happen. So if you're still going to have a day job of some sort of recurring earnings, then we can use your personal income information from tax returns to go ahead and calculate what kind of debt service coverage ratios or debt to incomes that you can qualify for. And you know, it's not to be said the projections are important, because back to having a plan, I mean, I cannot stress enough the importance of that plan. It shows you've done your homework, you've researched the market, you've done some strategy about what most businesses have zero income day one, right? And it may be that way for the first 90 days. And so you need to cover those 90 days, whether it's payroll, rent, supplies, inventory, whatever it may be. And so that way we always want to identify what the borrowing need is, because one of the worst things that banks do not like is if you come and say, I need $25,000 to start this business and I can start paying it back in 90 days, and we can structure that. And then in 90 days, you say, I need another 25,000, okay, and I need another 90 days. And so it's like you're constantly going back to the well, and we rather look at the big picture one time, and if it's 75,000 you need, let's identify that now and identify a repayment source and a repayment structure. So on a new business, your historical information personally is very important, and one thing I would equate it to is, let's just say you're going to quit your day job to start this business. Unless you have some liquidity reserves that keep you afloat for X amount of months, it's going to be very difficult to get a startup loan when you don't have any more recurring income. And I was talking to Laura earlier this afternoon, and I kind of equated it to like if you're shopping for a car unemployed, you're probably not going to get approved for a vehicle loan if you don't have a job. Now, there's things, never say never, there's things you can do. You can put enough of a down payment, things like that, but to be completely unemployed and trying to start a new business without any sort of additional guarantee. I mean, and we try to get creative. We want to, see if there's a guarantor, a family member, or somebody you know closely that also believes in your business, that is willing to say, look, I'm not going to put cash in it, but I'll sign on behalf of this person that, one, they're good for it, I'm good for it, in case there is a hiccup. So that would be my advice for new businesses. On existing businesses, kind of just the flip side again, we're going to look more so at the historical information of existing businesses. And so when they mentioned earlier about keeping financials, I can't stress enough how important that is, because a lot of small businesses strictly do annual tax returns. And a lot of small businesses extend those tax returns. So right now we're looking at getting 22 information on October 30th possibly. And we're almost 24 at that point. And so the most recent, if you don't have any sort of current financials, the most recent information we have is from 12/31/21, and as of right now, that was 18 months ago, right? So that's kind of considered stale. It's important information we need, but then we need to bridge that gap. So when you mentioned PPP earlier, I can't say how many small businesses we bank that don't do that. And that's fine. I mean, if they don't have a borrowing need or a substantial borrowing need, you can get by like that sometimes. But I mean, I created so many Excel spreadsheets just off of bank statements. What were your deposits and what were your expenses? And that's basically a cash basis accounting. And so by doing that, we were able to help a lot more customers in the second round PPP because of the qualification requirements to show that quarterly. And it was, I believe, a calendar quarter, had to be January through March, April through June, and so on. And so we got their bank statements. Again, if they banked with us, it's easy. We have them on record, and just do a quick P&L for them. So even if it's something as simple, if you will, as just reconciling your bank statements for your income, monthly income and expenses, that helps us see where you are, from a monthly, quarterly, annual basis. So again, historical financial information is crucial and key, more so than projections. Projections is important to show you're doing your homework, but we kind of marry those two together whenever there's a new request or an expansion request.
All right. Now, just real quick, from what we've said so far, does anyone have any questions of the panel? Okay.
How important is the relationship with the, I'm sorry. How important is the relationship with the lender to your client? Is that more important than a credit score?
I would say absolutely. So, you know, a lot of people say there's different C's of credit. Cash flow is one, right? How much can you afford to service? Collateral, what's going to back the loan? But what we probably weigh more than anything is character. And so at the end of the day, it doesn't matter what's written on the piece of paper and what you sign. It's like, we're not going to lawyer up and fight about whether you owe it or not. Let's figure out how we're going to get there. So that's a great question. So one thing I want to encourage is when you meet with your lenders is be prepared to spend some time there. One thing sometimes my coworkers criticize me of is how many questions I ask. And it's not because I'm nosy. I mean, but if for me to be an effective lender for your business, I really got to have a good understanding of how you operate. I don't need to be able to run your business, but I need to also be able to articulate to you what we look at as lenders and what, you know, the debt service coverage ratios, the collateral ratios, different liquidity requirements or covenants we're going to put in the loan for how much cash you have to maintain or how many months of reserve. So it's kind of a two-way street where I can't just be one-sided, ask you all the questions and not expect any questions of me and my bank or our policies and procedures. So that relationship goes a long way to really, you know, in my 26 years, I'll say I've learned a lot about very many small businesses. Not enough to want to myself go into those businesses, but I appreciate the time my customers have taken to educate me, and I hope I've done them the same favor in return by educating them of what it takes to get a loan.
Offer on. I'm on. Relationship building is important in my world, but we are very much focused. We are a cash flow lender, just like the banks, and we need to see that the borrower has the capacity today to pay me back for an amount that they may want to borrow. So I may have lent you money a couple of years ago, but your financial situation has changed, right? Lots of financial situations change because of COVID. So today I may say, you know, I helped you last year or year before last, but I can't help you today. Today, if I were to help you with a small business loan, I might be challenging your budget, right? I know you need it, but based on our underwriting guidelines, yes, you paid me back, and yes, you paid me back on the right terms, but today you have other obligations that need to be met. And then when those are cleared, then we can talk again. I had a young lady just yesterday, and I was sharing with Mark her situation. She had some credit challenges. We were able to lend her some money, but she wanted me to extend the terms, her terms. And I said, nope, this is what we can do for you. We're going to lend you the same amount of money, our terms, or we'll lend you less money, our terms. And then she said, let me take care of some of my obligations first, and then we'll talk. Because I just realized that 45 days after I close on this loan, I have to start paying back my loan, and I haven't even started my business. Or 45 days from today, I realize I'm going to have to start paying you back, but I'm not going to be able to. So it's a interesting question, and it's a good question because character is important. I do not have relationships with you like the banks do. I don't have your bank account. I don't have your savings account. I don't have your mortgage. I don't have your car loan. I have your business loan. So I'm looking at your business income to support the debt, but I'm also looking at you from a global perspective that we need for you to be able to survive. If it's such a tight payment, then in our opinion, it would be the wrong thing to do for our business owner. But if you do something in 6 months that I might recommend and you follow it, you can come back to me in 6 months or a year or 18 months. But that's a good question. I was a former banker, so we did work on relationship banking. I worked for the national banks. We were a little bit more conservative, and sometimes we still couldn't lend the funding. So I had to send them off to my bankers in the institution for either my company or something like Clayburgh Bank.
I think in general, no matter what, relationships are important. Just like the relationships you're creating in this room, right? The relationships are always important, so having a good relationship with your lender is a great idea. So if you go to your lender, you know you're going to want to take a business plan. If you're starting up, you want to take some projections that support your sales plan in your business plan, right? You need to make sure that your projections are believable when you're projecting, right? And then if you're already in business, you're going to take your business plan and your historic data. Now, let's just say, let me ask Laura, if a business is starting, right, is it important for them to include startup costs? And what do those startup costs look like?
So when the business is first starting, I do want to know, do you have industry experience? Sometimes you don't, and then I'm concerned. I love this spreadsheet that I use. It's a projection spreadsheet. And I asked them, do you know what your startup costs are going to look like? Well, I'm really not going to have any overhead. And I said, well, what does that mean? I said, so let's look at, well, I'm going to be home-based. And I said, all right, but what other costs do you have? So I actually will turn the spreadsheet to them, and I show them this spreadsheet with all the expenses that you may incur in the business that you're going to be in. And I did have some people say, you mean you want me to make this up? And I said, well, if you don't know, yes, let's talk about this. So we go through the expenditures of what their industry might have in expenses, and then after we look at those expenses, and I say, okay, now once you've done that, how much money has this, what's the bottom line? Now, how much money do you need to make to support that bottom line? And we actually go through that, and that takes about 20 minutes, and that aha moment is really interesting because it helps me discover what you know and what you don't know and what other technical assistance you're going to need and guidance from my partners, either from SCORE or from the SBDC. And so those are real important, and I think Mark kind of talked about that. Those are important because I need to know that you need to know what your real costs are going to be, how much money you really are going to need to start making on a daily basis to support yourself, and then what else, because if you're going to quit your day job and you're expecting this income from this new business to help you support your household, then we have to have another discussion, right? So it's very important that you understand those pieces. Did I finish the answer?
Yeah.
I'm very long-winded, I'm sorry.
So that's what happens when you get old. You forget what you're going to say. Does that happen to anybody else in here? So one of the things I think that's important is, and I've got some other questions here, but I know people like to hear stories, right, about other people that have been successful in obtaining funding or working through their financials. And so I'm going to ask Ann if she has a success story that she can share as kind of a lesson learned for everyone in the room.
Sure. The one that comes to mind for me was one from, oh man, I've been with the SBDC for 27 years, and this one was probably about 25 years ago, and I think the business is still going. It was a restaurant. It's a restaurant in Corpus Christi. This is a family-owned operation. This family didn't have deep pockets. They were very hardworking individuals, but they had to scrap and save for their initial investment to get that business going. How they raised their money for their initial investment to get their business going was they went and sold fruit cups and snow cones and all kinds of just real small efforts that led to them just putting that money in the bank, I think they sold their car. When they were finally ready to pull the trigger, they got a small microloan. I'm not sure if it was from Accione at the time. And I think they started this business on, I think it was definitely not six figures. It was a smaller amount. But then, so they opened the doors, it was a husband and wife, and I believe 3 small children. They lived in that restaurant, in a back part of the restaurant. They lived in the restaurant for, I think, a matter of 2, 3, 4 years, somewhere along those lines, to grow that business and be able to put everything back into that business to help it grow, grow, grow. And they got to a point where they had been around long enough that they were a good candidate for a commercial business loan with an SBA backing, and they applied for a bigger SBA loan, I believe a 504 loan, and expanded the business from there. And I believe ultimately they ended up with 2 or 3 locations. So they've been very successful, but family and friends, I mean, their startup funding situation, people say, well, how do people get, they get grants, how do they get the money to start this business? It's hard. I mean, sometimes they just put in the hard work and the sacrifice to get that money together and make that happen. So it's not like buying a car. It's not like going down to the car lot and saying, I want to finance this 100%, and maybe I'll put $500 down, and out the door you go with your car. Getting business funding is very, very different, and it does require, a lot of times it requires a lot of sacrifice and hard effort on the part of the business owner to get it rolling.
I love that story. Do you guys like that story? Yeah. How many are here are that dedicated? All right. All right. So Ann talked about a 504, right? Which is part of an SBA program. But, and this is to Laura, when we're discussing small business finance, you often hear the term CDFI and CDC, right? So what do those stand for, and what do they do?
I looked up CDC, just so you know. I knew what CDFI stood for. CDFI is a Community Development Financial Institution. That's who I work for, a LIFT Fund. And this organization and organizations like LIFT Fund and People Fund in the back there, we were organized to help the community, to invest in the community, to offer technical assistance, and to access to capital. So that's what we do. We lend money. Going back to the 504 question, the CDC is a community development corporation that works in a similar fashion, working in partnership with banks so that we can offer the guarantee of the SBA through the 504 program, and where that organization helps us help the business owners get access to the capital they need for the larger purchases like real estate, big pieces of equipment, and things of that nature.
Do you know, what is the breakdown when financing? Because you've got the SBA, you've got the CDC, and then you've got the borrower. Do you know?
So usually the bank takes 50% of the lending portion from the borrower. The CDC on the 504 program will take a portion of what we've determined that the borrowers needs to take. So sometimes they say it's 50, 40, 10, right? So the borrower needs to bring in 10% cash, whatever injection. CDC does 40% of the guarantee of the SBA, and the big bank takes the portion that they want. They go in first lien position. However, if there's some risk, and Mark, you can join in after I finish this, if there's some risk factor, then we may ask the borrower to bring in more money, and then the CDC comes in with less. I'm going to pass it to you to finish that thought.
Sure, and that 504 is an excellent program. We've used it quite a bit at the bank, and to Laura's example, and let's just use a $100,000 loan or purchase price, if you will, on a real estate. Typically, a bank's going to want anywhere from 20 to 25% down, possibly more again if it's a little more risky, say, or it seems like it may be a startup or a large expansion. And so at from 100, that's 25,000 at least, right? And so in Laura's example, where it would be a 50, 40, 10, the borrower just comes up with 10,000. The bank makes a loan for 50,000. And then we actually make two. We do a first lien for 50 and a second lien for 40, and we sell that 40 to the CDC as a debenture. And so it's very lucrative for a bank because we're in a good loan to value position right off the bat. So if something did go wrong and we had to liquidate, chances are at a 50% loan to value, you're not going to lose any money. And so it's lucrative, and it really helps. The benefit of the debenture on that CDC loan to the 40% through the SBA is it's usually it could be up to a 30-year term at a pretty low fixed rate. So when a bank may, and not right now, but we can talk about rates a little bit later, maybe. But let's just say a bank was doing a loan at 6% on your first lien, $50,000. This loan could be 2.75. It could be 3% on the 40,000. So there's a lot of benefits. And if the bank's saying we'll do it for 15 years on your 50, the 40's at 30 years. Now you have less cash flow obligations or debt service requirements because of that extended term. So it's a really useful tool. And it's not very complicated like some other SBA program 7A. Not that those are great programs too, and those are just a little bit more paperwork for banks. So like we're authorized to do 7As, but we don't do them because we don't have the expertise in house. But we do 504s all day long. So it's a great program, great tool for financing various things.
Okay. Can you just real quick address the current interest rates?
Yes, absolutely. So I think that's one thing that's interesting is it's been a while since we've seen a rate environment like this. And so I think I don't have the exact dates, but I would say 15 months ago, prime was still 3.25. And it was like that for a long time, so we all kind of got spoiled on, while if you were investing money in CDs at a bank, you weren't getting paid anything, but if you were borrowing money, we were doing, for the right credit, we were doing 3.75% real estate loans all day long. And so now today, prime is 8.25. And so I have a quick example I wanted to use, and I just used the $500,000 number. 15 months ago, prime was 3.25, and you could get a real estate loan at 3.75. So on a $500,000 loan, your payment would be about $3,000 a month. And let's just say you wanted to buy at $500,000 some apartments, units, or something, or a retail center. And so if your payment's $3,000 a month, you could get by and satisfy a bank by leasing that property out for $3,750 a month, triple net, meaning that your tenant's going to pay taxes and insurance, and so you as the borrower have virtually no overhead. And so if you're getting $3,750 a month, you would have a 1.25 times debt service coverage ratio in that scenario. So fast forward to 15 months current, prime at 8.25. And in that scenario, you're borrowing at 50 basis points over prime. Fast forward to today, that same borrower that would qualify for a 3.75 rate would be at 7.75 today, so 50 basis points under prime. So it's a better rate in reference to prime, but it's more than double the rate 15 months ago. And so in that same scenario, that same loan today is instead of costing you $3,000 a month P&I, it's going to cost you $4,100. And so now to be at a 1.25 debt service coverage ratio with your tenant or tenants, you would have to collect $5,125 a month of rental income, and that's almost about $1,500 more dollars than in the other scenario. And so even though rates have gone up that high, leases have not repriced that quick. The market has not been able to absorb an increase in leases and whatnot. So the biggest thing we're seeing today is somebody wants to buy a property, they get it appraised. The comps from the last 12 months still show that the market value is the sales price, but with interest rates more than doubling, the property can no longer cash flow based off the old lease rates. And so we had a customer ask us, I was telling Laura about this, he's like, I need the rate to be low enough for the deal to make sense for me. And we told him, I said, we understand, and we're going to try to charge you a fair rate. If we're 50 basis points under prime today and we were 50 basis points above prime, I think that's a fair rate. What you need to rethink is the sales price or the down payment. I mean, we want to help you, but the numbers don't make sense right now based off what having that kind of vertical steep increase in rates in a short-term period. So that's kind of what the market's doing. So the real estate prices right now, basically, your real estate values are dropping because of borrowing power. And it's the same in a mortgage. When your mortgage is 2%, you can buy a lot more house. When it's 6%, you can buy less house. So it's the exact same thing happening right now. It just took longer than the mortgage side of it to catch up.
Thank you. Just real quick, does anybody have any questions, comments, concerns? Anybody? Wow, okay. I guess we did a good job explaining. Excuse me. One more quick thing. If you need assistance to even start or put together your business plan, to get a good start, the SBA and SCORE, they have templates on their website, so www.sba.gov. If you want to, kind of start putting together a template, I think SCORE has some great templates for projections and financials. And then if you don't have a lender and you're looking for a lender, we have on our website an online tool called Lender Match. And so if you're looking for a loan and you go to our online tool, which is www.sba.gov/lendermatch, you'll just put in your project. It's about 15 questions, and it gets shot out to a whole bunch of different lenders that are participating in that program, and they'll either opt in or opt out. But it's an opportunity, and I hate to say this because we have a local lender here, but sometimes the folks that are going to respond are from outside of the area. But that is an opportunity for you to get a loan or to find financing one way or another. So so remember www.sba.gov. And then I always shoot out my personal desk number in case you need anything. We do have boots on the ground here in town. Elizabeth is local, and Monica is very close by in Corpus. But my phone number is 956-625-2076 if you need anything. Have a question or whatever it may be, please don't hesitate to reach out. And again, thank you to the panelists, and I also want to just give a big shout out to our resource partners, SCORE and Del Mar College SPDC that are here. Laura.
I just want one more comment, and thank you for letting me interrupt you. Because we're a CDFI, we get multiple programs that offer lower interest rates that are different from the banks. There are qualifiers for them, but U.S. Treasury through the EDA office, we have a program that if you can qualify under our guidelines, the interest rate is fixed for 5% for the life of the loan. In Corpus Christi, the city of Corpus Christi is buying down the interest rate, and the interest rate is at 5.5% up to $75,000. And if you're a veteran and you meet veteran status and qualifiers for our underwriting guidelines, your interest rate is fixed for 5%. And I will tell you, just 3 weeks ago, I financed a loan here in Kingsville, and both of us thought it was typographical error for the veteran, and it was a 0% interest rate loan. So depending on the program that we have, and we get multiple programs all the time, you just have to check our website. We could have some favorable rates for you, and it's because we're here to help the underserved business community. And I still partner very closely with People Fund and with my banking partners because we are partners, and our job is to help the underserved business community to the best of our abilities. I call us servant lenders on purpose. So thank you for letting me interrupt.
I guess we done?
Mark wants to say something.
Oh, okay.
No? Okay. If I could follow Laura's lead in interrupting. Bankers don't always have the best habits. We interrupt sometimes. So, but as far as what Angela was saying, if they're on some of those that get broadcast banks out of the area, that's not necessarily a bad thing. What I would encourage and make myself or any other banker that you may know is bounce it off them to review for you if you have any questions. See what kind of a deal it is. There's lots of opportunities. Sometimes we even encourage our customers to seek seller financing temporarily. And sometimes that's a win-win for the seller because they don't take that lump sum up front and have to pay tax on it necessarily. So they can give sometimes more favorable terms. And what I'd like to do, I did a class, even though 26 years, I walked out of my office, I only had one card and I gave it away before I got up here. But I'd like to give y'all my personal cell phone number. I have at least 45 minutes each way going from Alice to Corpus of windshield time. So I love talking on the phone, catching up. So if you want to write my number down, you can. If not, not a problem. But it's 361-453-2111. And again, I'd be glad to just answer any questions if you want to bounce ideas. If loyalty to your bank is good, so if your bank gives you a deal and you want to just review it, talk through it, I wouldn't mind doing that. And so again, thank you all for your time. Appreciate you having us here.
From a local market perspective, when a small business, especially startups, come up to our lenders and also to our SBDC clients, what would you say is the #1 reason why they are not able to get funded?
They're not prepared. They have not looked at their credit. They've not looked to see what their credit score looks like. They are not prepared with a business plan. They are not in the industry that they want to go into it. They are hoping that their idea is going to be beneficial, and we're having to make a hard decision as to why we can't. They don't have capacity. They don't have a secondary source of income. There's multiple reasons, but the main thing is I think they come unprepared because many times they had to open up their own business because they got laid off, right? We were talking about people trying to look for jobs, but they got laid off and they can't get back into the work market. And so they have no choice but to go ahead and try to start a business, and they're totally unprepared. There's no cash reserves, and they're not able to, they're going to do what Ann's clients did. They're going to figure out how to just, bootstrapping is what the term is being used, and they're going to get rid of everything they have so they can start the business without our help. And that's Ganas, right? That's just having the strength to get out there and just figure out a way to get rid of everything and then bootstrap it until they have, and then our job is to coach them how to get ready to get access to capital. And that's what that's the best part. But that's a good question. Most of them are just not prepared. And they're very disturbed by their responses from the traditional banker because they think the banker is supposed to help them. We use the word entitlement. You are not entitled to a loan. You earn the right to get a loan. And if you don't understand your credit, come see us and I'll walk you through it and I'll help you clean it up without paying somebody to clean it up. Because it's not good,
One quick question. Should someone start a business on credit cards?
People do all the time, but that is so hard because we talk about principal. You borrow $10,000, right, off your credit card. You get a fee right away because it's cash advance or you're buying purchases. If you don't pay that off every day, that interest that you're accruing becomes part of the principal every day. Every day that principal is getting bigger and bigger and bigger. So when you come to me or you go to Mark, we're trying to figure out, well, how much of this on your credit cards did you really use to start your business? And then we have to nickel and dime it together. And if it doesn't work, now you're over indebted. Like your debt to income ratio is, you owe 80% of your salary is going to debt because you have so much credit now. So it's a difficult answer. Unless you know how to play the credit card game, you're going to find yourself in a whirl of financial obligation. My brother and sister-in-law filed bankruptcy because they used all of their cash reserves and then started using their credit cards after 6 years. And they had a strong financial portfolio, but they didn't know how to run their business either.
Okay, we're getting the hook. We're getting the... Thank you. Thank you, everyone. Thank you so much.